Good evening, everyone. My name is Martha Chamberlain. I'm with Mossy Ventures, and this evening I have Dima Yurchenko with us, and he's going to be talking about his the work that he does. He's a business development and partnership professional. He's focused on helping software platforms, ISVs, and small business technology providers integrate payment and commerce solutions. A very quick, easy solution to help you take payments with what you're doing. So he's based in London, but he's not at the London Tech Week yet. And I'm not either, but later in the week we will be. And these works with SumUp, one of Europe's leading fintech companies that serves millions of merchants worldwide. And he's involved in building strategic partnerships and expanding the company's reach across the UK and European markets. He has a background with spanning sales, business development, and customer-focused growth roles. And Dima has developed a reputation for relationship building, which is one of the things near and dear to my heart. He also works with commercial execution and supporting innovative solutions that help small businesses simplify payments and operations. All right, so thank you for being with us this evening, Dima, and go ahead and start when you're ready.
Yeah, perfect. Thanks for the introduction, Martha. It's a pleasure being here today and also meeting the business owners and founders. Indeed, I've been with SumUp for nearly 3 years now, and I was in sales previously in this company. Now that I cover the partnerships, particularly working with independent software vendors in EU, I've been a part of a team of five. We do have acquisition managers like myself, growth managers, also sales engineering. The purpose is just to cover all of the flow and ensure that founders and business owners get the full support from day one to the moment they go live and they start acquiring new merchants. So we also try to stay on top of that. Thanks. Recently, I was covering 11 markets with a pure focus on Central Eastern Europe. That's also, I've attended one of the events in Latvia, so that's how I met Martha. It's again a pleasure knowing you. So today I wanted to frame it as more like a Q&A conversation, having a couple of people also join the session. I don't want to purely pitch or just, to speak something which is irrelevant. Really wants you to collaborate, ask questions, make it more entertaining. So at the end of the day, my goal is for you to living with a knowledge database, which might be helpful at this stage of your businesses or maybe in future. And obviously for those who will be watching the YouTube's video, it'll be helpful to share some insights that I have in mind. So as I mentioned, I work with independent software vendors, and we always been in touch with founders, and they are focused on growth. Obviously, the core idea is for them, okay, how do we acquire more customers? How we do increase software subscription revenue for those who sell software? How do we also reduce churn? What do we do to ensure that the customer retention works well? So obviously, most of the platforms that we are targeting here, just to let you know, our ICPs, obviously hospitality, retail, medical platforms, spa, wellness, retail. Why? Because we noticed all of them selling something for businesses to make their life easier, right? And we just a stepping stone, a partner that helps them to process the way businesses take payments today. It might be a time when the platform has the embedded checkout, which is as simple as to allow to take payment. For example, a very small case, wherever we go to get a coffee or wherever we go to the shop, we always use sort of like the touch screen or similar device, and at the end we are asked to pay. And every time we click pay now, the amount is appearing on the card reader. And that obviously allows for you as a customer to quickly pay you might, regardless if you're in the petrol station, on the grocery store, and the coffee shop. And it often goes unnoticed, but for the businesses, actually, they have to think about how to ensure that you get the best customer experience as if you were in any of these places, right? So to do that, they often embed payments to ensure the transaction goes smooth and the payment is being taken. That is the easiest way. I've discovered when working in sales and now that it's been over like 1,000 different providers in the world, and some core work with enterprise industry merchants. Some of them work with smaller businesses as well. All of them, they have different business models, the way they make money, the way they work with founders, the way we work with businesses. We realized that some of them not getting earned from that, right? So embedding is one thing, but also the second thing is, okay, do I actually make money of that, or is it actually the third party company that is making money out of this? And today I'll notice that questions have been asked for founders. How do I connect payment provider? How do I capture value from transactions that is happening inside my ecosystem? And there is also where embedded payments become interesting, because when implemented correctly, they don't just generate the additional revenue, they actually want to increase the product stickiness. And the reason for that is, as I mentioned, to improve customer experience. So in these cases, and the one is one of the most predictable and scalable revenue streams as a software business can build. And I wanted to tell you why is that important to have this element embedded, regardless if it's a card payment or if it's the online transaction that is happening, and also how software companies can actually make money from payments. I wanted to briefly cover the mistakes that founders repeatedly make when selecting partners. And within my last 6 months, I've heard a lot of different questions, and as well, some businesses already might be working with payment providers, but I also noticed there is a chunk of businesses that don't have any because they're either new on the market or they never considered that before. And lastly, so I'd probably start with the simple questions I'm always asking founders when I'm on the call. Is like, do you know how much payment volume your customers process every year? And I often hear like most of them don't, because they might be having like either 100 or 1,000 customers, and they might be just only charging their software fee, which is like, let's say, 100 euro per month, and generate only tiny 1,200 euro a year as an MRR. However, they never know that the same customer that is using their software platform and paying 100 euro, £100 fee every month might be processing 100,000, 500,000, or even several million euros or pounds through the platform every single month. So in this case, we got to the point where the software company captures purely the subscription fee, but the payment provider captures the transaction economics, which is transaction fee, any additional costs that might be associated, often hardware rental. So actually, who is making money here? It's a software company or the payment provider. In most of the cases, depending on what sort of product you provide to the customer, the payment provider still will play the pivotal role. Adriano mentioned that he was working with Stripe, and there is one of the most common payment providers in the world. And I must say, I've spoke to thousands or hundreds of businesses, and I've heard that Stripe is being selected purely because it's known, they have an amazing ecosystem, amazing product, and that's actually true. However, I was also approaching this conversation from different angle. Do you actually make any money out of that? And in 75% cases, I heard no. So when diving deeper into how this relationship built between payment providers and software owners, I've noticed that there are obviously like some perfections or imperfections on the market. In particular, customer service, cost for the end merchant, and also as the business owner, the platform founder, you might be asking, okay, what's the added value here for me? I might be integrating Stripe, or any other provider, but would they actually pay us back? So that is super important, specifically when we talk about restaurants or booking platforms or the healthcare scheduling or the field sales management companies, or anything else. Literally everywhere, even if it's a smaller e-commerce business, do you monetize actually? What is that on top of monetization of payments? Is there any revenue share on that? And I must tell you that I've explored how software companies today monetize payments. There are different models, of course. There is a referral. So, for example, they can do a simple introduction of their merchant to the payment company. So all of the payments will be processed inside of the platform. That's the very low effort and also the low revenue. At the end, it will cost you a transaction fee that you will pay to the acquirer for the online payments or for the card payments, and that's where the story ends. Now, the second model is the revenue share, is actually where the provider handles payments. So the platform receives an ongoing share of the transaction revenue. In this case, this is where actually founders start making money. Why? Because, okay, there is a fee that you pay. However, you've paid, let's say, €1,000 on 1 million, for example, but out of that €1,000, it might occur that you get in 100 or 200 back. It's not as bad, obviously, but it's better than having nothing, right? And just paying the processing fees. That is the most common model on the market today. And the last one is the full embedded payments, is basically where the payments become the part of the platform experience. I would say it's more tailored for larger businesses like enterprise with their sophisticated requests, where they have the full stack solution, like the white label on the terminal, anything else, or literally they just build in exactly just separate their own payment flow and name it as they want it. That requires a lot of effort that also has the highest strategic value. So at this stage, I want to emphasize that the right model depends on the company stage, the resources, and also the ambition. Still, with the most popular, I would say it would be the revenue share. Why? Because most of the businesses today, SMBs, obviously, and we have new startups every day coming into the market, and obviously trying to help as many businesses as they can to deliver the value. So they all have to start from somewhere to grow to the sophisticated, massive companies like we have Google, Amazon, Apple today. And for that, I will come back to the revenue share topic a bit later. However, I also wanted to cover some mistakes that founders make. And the biggest mistake coming from my observation is actually choosing the payment provider based purely on price. Let's say you had a conversation with 5 different payment provider and each of them had different approach to how they make payments. Some may tell you, okay, we have super low fees, but you have to pay us the rental for the hardware and there are some additional costs and the rates will be variable. So let's say it might be a time when you pay just 0.3% on debit cards and 0.6% on credit cards. Sounds good, no? Like, and the headline rate you buy, you say, wow, that's amazing, 0.3%, super cheap. However, what mostly goes unnoticed is that there are also something else which add ups on top, and you actually end up paying over 1% for each transaction. The second business model is when you have to reach certain like threshold for transactions. Otherwise, let's say £10,000 a month. If you don't do that, you will end up paying an additional fee to the company, despite the fact they declare that there are no any transaction fees. But actually, if you failed once, you've been screwed, right? You have to pay them back. That doesn't work well. And the third one of the most common is obviously the business model where you work with a payment provider which has no any commitment, like the contract, they have no hardware rental, and they actually come back to you and say, hey, we can pay you the revenue share. On this note, I wanted to mention, yes, that's the company I work for today, guys. We just simplified the solutions. So that is how you have to be a fit these days, regardless if it's a small business, corner shop, or if it's a multi-massive enterprise company with thousands of chains all over the world. The idea is to simplify the ways founders and business take payments and also make money out of that. Coming back to the topic of how does it affect founders? Simple, because most of providers you can actually integrate, right? But the other thing is the acquisition. Would you see the merchants or the businesses that are buying from you be interested to use the payment providers that you integrated with? Because if you have these three business models available for them, everyone will be looking for something that works best for them. Some may go for cheaper rate or like no transaction fee. The others might appreciate lack of commitments. And within my tenure here, I've noticed that lack of commitment is actually a key driver. Why? Because small businesses care about their merchants, about retentions, and the ability to take payment right quickly, and also to ensure the reconciliation. So that is how we operate on the card payment. But also, I want to check the live question before we move. How does it make difference if there is a need for physical payments versus purely online payments for SaaS platforms? No device needed on site. That is a very good question, and I will address that. So when there is an online payment, most of providers simply integrate, and there are some drivers like cost element and also support element. When I was speaking to businesses that were using Stripe, I heard that not all of them were super happy with also the costs, simply because they're often like in card payment, in online payment, you have some surcharge fees, 25 cents or pence per transaction, etc. So most of the companies that are using online payments sometimes not also getting the revenue share. There are different schemes on how the rate is being based. Some companies have fixed rates, like Stripe. The other companies might be having the different IC++ schemes cost, where you get the margin and you also get the card scheme paid on top. For SaaS platforms that I've been working with, they were anticipating great service, quick onboarding for their merchants, ease of use, and low costs. Obviously, the device is not needed over there and the reconciliation happens online. However, founders were looking to also get some revenue share, because today the business that you bring might be having 10 merchants. Tomorrow, these businesses might be having 100 and 150 merchants. That means processing volume obviously boosting. We start from 1,000 and we end at millions. And is actually the business able to do that? Is actually the business get able to earn commission on all of the payments that have been processed via their platform? In 75% of cases, I heard no. But here, like as I mentioned, we work at SumUp. We want to make sure that founders get rewarded fairly, that partners that we build integration with also get the chunk of the revenue share for that. Some of the companies might not be doing that. However, I'm super curious to hear Ashwin's contribution on that, how his experience was with that, and maybe you guys can also share a bit more on that end, so we can actually start addressing questions live slowly. Marta, what do you say?
Yeah, sure. Yeah, so I'm not, Ashwin, we didn't actually hear from you. Oh, we did. No, so we did. If it's easier for you to type or to talk, go ahead.
Yeah, so no problem. Sorry, I just had my little daughter also requiring my attention. So that's why I'm off camera.
No
No,
problem.
we are currently in the phase of figuring out what will be the right payment provider for us, because we had only online payments. And we have to address VAT issues and other aspects which we are investigating. That's why I asked. The example which you gave was more about where you need a physical POS device, and there I can understand there are other complexities. But if it's an only online setup, I'm trying to figure out what is the value and what is the differentiation. It's still not clear to me from what you mentioned, Dima.
Okay. So on that end, your question is related more to the integration, or could you just give me a bit more understanding about complexities that you had in mind?
So I'm trying to figure out, is there any new revenue with embedded payments when if we are running an online platform, whether it is selling cars or selling cabbages, doesn't matter, but it's a completely online experience. There is no physical store, so there is no physical POS machine, and all my merchant acquisition, all my customer acquisition is completely online. So
Yeah.
when that happens, the only process is when they are checking out and they've saved their card details. And we probably need to figure out if there are any VAT forms or VAT reclaiming mess which exists in Europe to work with. But other than that, I'm trying to figure out from your I'm curious to see, is there an opportunity which I'm missing? Is there a embedded payment aspect which I am leaving money on the table that I can look to exploit? And I understand the aspect when it's a physical store. I'm still not clear from your answer if there is an opportunity for a complete SaaS or a software company to be having this embedded payments and finding this new revenue stream. What is this new revenue stream?
Great question. Thank you so much. So first of all, online payment. Could you also tell me if you work with like either Stripe or maybe any other provider? What was your experience working with them?
Right now, we have not yet selected it. We are just in the
Okay.
process of figuring out whom to go with.
Okay, perfect. So I know that Adriano worked with Stripe, and also here is which will help me to answer also to hear from Adriano's point of view. Like, could you contribute a bit like on your relationship? How did you embed? So we will have Ashwin's answer partially covered, and then I will also add something how what we specifically we do different, if that's okay.
Awesome. Yeah, I can add to that. Um, so to understand, Ashwin, your question was in terms of the payments and a distribution for VAT, and how do you conciliate that together with your payments? Am I right?
Yeah, that's correct. So like you're based in EU, I'm based in Switzerland. So if I have an EU customer, I have to give a VAT refund
Yeah.
and VAT reporting.
So I think like that's a very good question, and it's a problem that we had at the beginning as well. And for us, it was identify the value added. We have a platform where basically we are the facilitators for online transactions. So
Yeah.
the inventory doesn't come from us. And what we file these things is cost of goods sold. And where we charge that is basically on the transactions that we charge for ourselves, not what we process to our customers, because every part are responsible for their transaction. But it's a unique situation in a sense how the providers they help us to process these payments and also to account for those. We receive our tax invoices, which is the value added for the service that we've provided and not for the cost of goods sold. And it gets a bit more complex than that, but on a very unique basis, and especially like processing payments online, this is how we found our spot, and this is how the online payment providers they help us. They help us providing tax deductible invoices for the UK only.
Thank you, Adriano. So it's exactly what also SumUp is helping businesses with. Obviously, they select the way how they want to reconciliate and at which stage VAT is added. There is a flexibility over that. The purpose of the payment provider is basically just to ensure that the payment is being processed and coming through to the merchant account or to the business owner account when they sell online, right? So I wouldn't be telling here, and I don't want to lie, we're not reinventing the wheel. We're just doing the things differently. Everybody has different business model. So when I purely speak about online payments at SumUp, we offer every possible checkout option for the businesses that we work with. Some needs hosted checkout, some needs payment widgets. So it's nothing different. The reality is obviously the cost, the onboarding, and the functionality behind. I just want to emphasize also one thing. SumUp is known as the payment provider for card payments, mostly for 4 million businesses. And we also now been facing a high demand of businesses that purely looking to cut costs because they work with other providers, improve experience, and also extend their offering. With that VAT case, that is a super basic thing that most of the payment providers have. And when you manage your account on the back office, you are in a position to set whatever VAT percentages you want, or you're also able to add it into invoices so your customer is actually paying the VAT directly, or if it's your supplier, then you can put things aside. I just really want to understand, Ashwin, if that information was helpful and if something else needs clarification, because as mentioned at the beginning, I prefer to have this rather than Q&A rather than just a pitching or giving you some predefined known things.
It's an interesting thing. I'll have to learn a lot more. So, but thank you very much for your answers as well as Adriano for sharing your experience. Uh, I will get in touch with you, Adriano, afterwards, also offline, to question on the VAT front. It's a bit of a nightmare. So, but thank you very much.
Yeah,
Yeah,
happy to connect. Thank you.
yeah, and thanks. Adriano, please continue.
Dima, I was just going to say, just to add one thing as well, then very important for Ashwin. The VAT situation is only based, and I'm not an expert on this, and correct me anywhere if you feel appropriate, Dima. The VAT situation is only relevant for the people selling if they're VAT registered on your stores. So
Yeah.
where your people are based on, it doesn't really matter if they bought from Europe or whatever. It's not particularly relevant for you. You just need to know from the people that you're sourcing your products from. So if they're VAT registered.
Yeah, that is absolutely correct. And that's also the question that we normally ask. And here, given the size of the deal, we happen to work with established companies that obviously are VAT registered. So to us, it come in as a default. However, we were having a couple of new businesses that are not VAT registered yet. However, they wanted to process payments. And just so you know, as every payment provider offering online payments, we do have both options in place, regardless whether it's a VAT registered company or not. Okay. I was also expecting to see some businesses that actually wants to use card payments. However, if you want to cover the online topic today, that's totally fine. I had something in our agenda for later on. However, if there are any specific questions that we can cover right now, I'll please let you unmute and ask them, Ashwin or Adriano, if you have anything in mind, or maybe Andres.
I'll give a bit of space for the guys there if they have any questions. I definitely have questions.
Okay. Otherwise, we can also move and I can tell you a bit of like overview and give you a bit of insights. So about revenue share and how you can not solely process these payments, but also make sure that you're getting paid for that, if that's fine. So we obviously new businesses, it's been a big topic for them and they're always looking for funds on how to build a bit of like rev share behind. And I must say recently, after attending a couple of events, met some new prospecting companies that actually been in e-commerce world and in offline as well. So it is a booking management platform which embedded the checkout in their back office and allowed merchant to process both online transactions and also offline transactions. They work with hotels, they work with large properties, spa complexes everywhere. So they got like solid merchant base. And one thing they were asking, obviously, for them, what's crucial if it's a hotel is obviously the cost. But normally, when we see they asking for cost. Payment companies ask, okay, what is your current setup? And if it's an existing company, that's where you start finding the hidden stones. And these hidden stones are surcharges, are lack of support at some cases, and also hurdles when it comes to international expansion. We noticed that businesses often start in one region, but they might be looking to expand into other countries. So we had a couple of use cases where business starting in Baltics, but then they obviously expand to Nordics, right? So these are how the business is connected over there. And important thing is obviously the costing behind is different for every market. But now, if you're actually able to get paid back, and for online payments, no, most of the times they just look at the ways, okay, I want to give the super low cost and see what it will bring us to. Now, at SumUp, we are a bit larger. We approach things differently. We were looking on the ways, okay, you use it for your own payment, but also you work with other merchants that are using that for. And the purpose is, okay, if they process significant volume of money, what will happen? Would you actually make money out of that? No. And we found a way that we always try to help the partners, the founders that we collaborate with to fund it for them. It might not be coming from the processing cost. It might be coming out of marketing budgets or sales incentives. Why? Because they put a lot of effort. I'm not speaking sole business owner. I'm speaking larger platforms again, just to define. And when they have like 300, 500,000 customers, obviously the topic of the revenue share is coming back. So what normally we do different, we spot it if we give them great incentives, they drive better like acquisition. For us as the payment company means revenue, means new customers. For them means revenue too. But then they get obviously the custom costs, lower rates, and the more you grow, obviously the less you want to pay here. So that is the real thing. And monetizing payments from merchants is important because if founders and business owners don't talk that out loud, most of payment companies won't be probably looking at that. So that is the message that I want to deliver today. And I know that we're in a very limited audience. So actually, it's just great that you know it. And you can also, whether you're now at this stage or whether you expand business in future, you may be asking payment providers to pay you back, to reward your effort fairly, to make sure that you are participating in that part of the transaction that is happening on their end, that you actually benefit from them. Because ultimately, most of business owners worried about today, okay, how do we grow? How do we expand? Where do we get funds from? What is our revenue? How do we maximize? Doing that on their back end, right? Improving the product, obviously enhancing some functionality, hiring more smart people, do marketing, brand, all great. But also, what do you get in return from the partner, the payment partner that you've been working with, and how does that affect your growth? And is that contributing to some sort of like product functionality development? That is a good question. So just think it's worth you to know it. And regardless if it's an online payment setup or if it's also the in-person card payment. To be fair with you guys, I prepared short presentation on SumUp. However, I wanted to stop myself here and actually see if we got more questions and what is really sitting on top of your head. Like what sort of like concerns you heard, what sort of like any issues you experienced. That's super interesting for me because, speaking to certain people is great, but having the group of people that run in businesses every day and actually working with venture capital companies with Martha directly and colleagues is great. So please, Adriano, I see you unmuted yourself.
Thank you. No, thank you. Appreciate that. Thanks for your time today, Dima. And thanks, Martha, for organizing that. For us, it lays more around the practicalities. Well, we are an online company, and we used to take a lot of card payments from our customers, but we started working more with corporates, so we changed that to BACS payments, which
Hmm.
helped us to reduce a lot of cost, and this is one of the ways that we worked on online transactions that for the services that we provide. In terms of card payments and online transactions, we have thousands of customers that we receive payments monthly or daily for the goods that we sell online. We have about 8,000 items that we sell online for on behalf of our customers.
Hmm.
And what do you guys do differently than Stripe? I would be curious to learn. Why should I work with SumUp and not Stripe?
This is a good
Not putting you
question.
to the spot, Dima.
Oh yeah, I mean, totally fine. I came here as a speaker rather than this salesperson, but I
Yeah.
appreciate you asking that question, and I'll be giving you a very direct answer. We have, obviously, as a large company, having 4 million customers worldwide, you need to find strong teams on the back. So we have strong support, which is pivotal and crucial, simply because I heard different feedback on merchants that were using Stripe, and I've learned from their experience they wanted to get amazing customer service, which sometimes they were not either able to get or it wasn't sufficient enough. I don't know. So we covered the topic. We do really care about partners that we work with because we understand if they will stop using SumUp, there are multiple providers on the market and they're hunting, somebody will approach and explain, hey, we are better than them, but why? Good question. Obviously, pricing structure is different. We notice that there is often the surcharge fee on top of each transaction. I don't know how it works for enterprise businesses. I must say we never explored this deeper, and also I think there's some confidentiality that doesn't allow to disclose that. But one thing I might let you know, we certainly don't have any additional costs related to each transaction. So we just set the fixed fee and it's the end total cost for the merchant of that is using the partner's platform. And at the end, obviously, I must say, we do have a wider product. When we speak online payments, yes, there is a hosted checkout, payment widgets. We do have Apple Pay and Google Pay as everybody else. However, I must say that 75% of our customers, approximately that, know us for card payments. So they often start with card and then their business evolves to e-commerce marketplace, something bigger, something where they can get revenue from. And the easiest example, probably retail. So they do have physical stores where they sell hardware, like physical hardware. However, we also work with platforms like Amazon. So that's pure e-commerce in this end, and that's how it's been working with them. Now, I think costing is the most important and support. Also, the onboarding flow. We do have the self-serve onboarding, which is crucial, right? It takes less than an hour for the business to get to go live. So our self-serve flow allows just 98% of customers like start taking payments within the very short period of time. So why? Because it's as easy as to register an account, upload your business documentation, verify your identity like everywhere else. So then your account is fully onboarded and you can take payments and pay out it even within a couple of hours directly to your bank account. That's how we do things differently. And it might sound not very different. However, we see that businesses that I've spoken with, they were okay. We do actually care about quick onboarding. Okay, we do actually care about costs and the support, but also we offer the revenue share. That also what differs us. So depending on the volumes, depending on the transactions, the merchant database, we sit down, we tailor a commercial proposition for merchants and partners, which makes that the partner of ours that is using SumUp for online payments or for card payments get competitive transaction rate for the end user, but they also have the small revenue share, which sits directly in each transaction.
Awesome. Thank you. Thank you, Tim. I appreciate that.
Okay. Well, on that note, I would like to hear more questions. I was trying to cover some of the topics. However, please have a look at the agenda. Maybe you have any specific questions at this stage. I'm happy to address. Alternatively, I can share my LinkedIn, I can share my email address. I'm more than happy to share also my meeting link. And whether it's a business case or just a casual conversation, I'll be more than happy to meet you. And I'll share all of these links with Martha so she can put it on the description down on the call. So then people who are really interested and want to dive deeper into that, please give me a shout. Otherwise, I'm still here. I'm still want to do this Q&A session, not to pitch to you, but actually I appreciate the format and the way Adriano unmuted himself and started asking questions. So please don't be shy. The more use cases we have, the more points we address, and the better we understand what is also the add value for you as the founders. Because to me, I'm a partnership manager. I'm a regular man. I'm a bridge between payment provider and companies. They want to build something meaningful and being rewarded, get the trust partner. But for you, you're actually building something every day. So if you guys don't mind, feel free to unmute, ask comfortable questions, and I'll try to help you as much as I can with the remaining of 15 minutes.
Do you want to put your contact, sorry, excuse me, you want to put your contact information in the chat, Dina, now?
Yeah,
Or
absolutely.
Or you can certainly give it to me and I can.
Absolutely. So first of all, I already add in Adriano. Thank you for sharing your LinkedIn profile. So for that, I'll also share mine here. There you go. There's also my email address. And maybe one more thing that I can share with you is my calendar link. For those who want to have a deeper chat, professional or just casual, please do let me know. Here is the calendar meeting link.
Yeah, that was going to be my next question, Timo, but thank you, Martha. Thank you for that. I added you on LinkedIn. I'll be more than happy to have a conversation and a follow-up because I think like I love supporting the people that I know and work closely with your inner circle and having you guys over here. We are a technology company. I mean, it won't be one of the 1 hour integration to switch, but we can flip a couple of things, code snippets here and there. We have a couple of webhooks that we take payments. We also use a bunch of integration on our website with payment system webhooks and card payments. And but I'll be happy to talk that over with you and see if there's space to collaborate.
Of course. On that note, thanks for sharing. Actually, the last link that I shared is our online documentation from SumUp. I suggest that you keep an eye on that. It's pretty informative. So you have most type of integrations covered with obviously the explanation. And also to get back to your question, what we do differently in terms of integrations, we have a dedicated team of sales engineers as everybody else. However, we don't have minimum thresholds for the company that we work with, which means whether you're a startup or you're a established scale up, in this case, we treat you equally. We'll normally provide all of the sandbox, all of the information. We arrange pre-sales engineering calls, ask questions, understand what is that you're trying to achieve, how is that going to help you in future. And normally we do support you on every single stage. So whether you have any issues or just needs to get some like confirmation, we'll be there. The team of engineers is always available for you and for partners, because we do understand we don't want to have this purely sitting on the back of their mind. We want to help them to have the things done. And then as a result, once it's embedded, they start using, they start benefiting. Some of them start saving money already. Some of them just purely looking how to acquire new merchants without commitment. So that's what we all are. And if I had to mention the time frame, it really depends on how collaborative you are. In my experience, I had some businesses that built integration within 4 to 6 hours, and obviously there are businesses that takes them like 1, 2, 3 months of time, depending on the resources and the capability, engineering capability that they have. So yeah, Adriano, again, thanks for flagging that question. It was super helpful, and reach out. I can walk you through that. Maybe if you have any particular questions on the documentation, feel free to send an email and I'll put you in touch directly with people who build integrations, technical guys that will provide you most of the insights. With that in mind, I'm trying to tell you I'm more the commercial guy, obviously, and representing a larger company means assessing a lot of needs, addressing pain points, understanding the end goal also, and where is the real value sits. Okay.
Awesome. Thank you. Appreciate it, Matt. Really important. And yeah, I do appreciate that. I think I looked into some up before. It's just that we were so busy scaling the business and I never went back again. So yeah, I'll definitely be happy to look into it and see if there's more space to collaborate together. Thank you.
Adriano, one question to you. I've noticed you might be speaking Portuguese just because I have friends with Gonçalves last name. Correct me if
Yeah,
I'm.
yeah, I do. I do actually. I was born in my family's from Portugal. I was born in Brazil, but in the UK for about 20 years now. So I'm a bit confused where I come from when people ask me, but yeah, definitely
And just
Brazilian
out
born.
of okay, and just out of curiosity, One Livery is the project that currently operates in the UK, right?
Yeah, UK based. We're London based.
Okay. Is there a plan for you? Do you look also to scale up in Portugal, let's say, or in Europe in general? Maybe
We
you're
will.
already working on that?
Absolutely, we will. That's not a question of if, it's just a question of when. So
That's a very good approach.
just wait for us and we'll be there.
Okay. On that, I've asked this question specifically because I understand I'm originally from Ukraine, and I know one day I also run the business. It's great when you're based in London, so you have an access to everything in this beautiful city, and it's super easy. However, when it comes to building business and bringing it on the broader scale, it's important that you work with a company that can just be your partner across regions. And that also the topic that I've came across often, given how they want to where they want to operate. So we actually have seen there is a need currently because companies really want to be multinational, regardless if it's LATAM, for example, or if it's EU. So we've been the bridge. Yeah.
Absolutely. No, it's that's in the roadmap, and we'll consolidate our market in the UK, and then we'll defer proceed to um, international markets.
Yeah. Okay. And also seeing the message from Andreas. Andreas, thank you so much for joining. Dankeschön. I hope your stay was safe last week in Kiev. So yeah, and I hope you liked it and we'll come back when things will change. All right, I think I'll pass it over to Martha. I mean, it was great to learn some case studies. Ashwin, Adriano, special thanks for contribution today. I'm more than open to have to have chats with you. Reach out whenever you want. If I can actually be of help, let's work together. But if you also need some sort of like insights or information, please do let me know. I'll try to do my best and help you.
Awesome. Thank you. Appreciate you.
Thanks a lot.
Great. Thanks so much, Dina and Andreas and Ashwin and Adriana. Adriano, excuse me. Um, but yeah, very interesting. And Dima, when we've had conversations, and yeah, he gives me a lot of interesting information, things to think about. Thank you very much for your time this evening, and hope you have a good rest of the week.
And you too. And I hope everybody is going to enjoy the London Tech Week. And wishing you the fruitful event, meaningful conversations, prospects on the list. Yeah, so funds in the pockets, in the company business accounts. So whoever wants to achieve that, I wish you all the luck with London Tech Week and going ahead.
Great. Okay.
Thanks for inviting me, Marta, as well. It's been a pleasure.
Absolutely. Great to have you here, Dina. Thanks for your time.
Thank you very much. See ya.